All right, everyone, we're ready to go. All right, well, welcome. Thank you all for coming. It's a great turnout. And before we start, I'd like to acknowledge Julian Malnick, the chairman of the City Mining Club, and I'd also like to acknowledge our wonderful sponsors. First of all, our gold sponsors, AME Group, Beyer, and GBA Capital. And then AMEC, we've got Bruce Fulton and Kerry Atkins here, and Jim Beyer, of course, who's our flagship presenter today. He's also a director. We've got CRE Insurance, Fender Geophysics, CRU, APM Graphics, Ioneer, Lithium Boron Project, Kingsgate out in Thailand, producing gold now. It's fantastic. New South Wales Minerals Council, Steve Galilee sends his apologies today. He's up in Byron Bay, lucky man. We've got RAS, Research as a Service. Finola Burke's here. Thank you, Finola, for all you do. Taurus, I think Gordon Galt's here, down there. Taurus gentlemen. Tees and the Stock Network, and of course, Veritas Securities. Now, I understand it was a late change of speaker. Chalice, Mr. Dorsey pulled out at the last minute, and there was a bit of a scramble, and I thought, well, who better than Regis, given what's happened over the last 2 months, to come and tell their side of the story of what's happened. And if you let me indulge, I happen to be a journalist with 2GB Radio, and this is a story I did a lot of work on. And I'm rather proud of the work because it's exposed a lot of concerns that the industry holds about government and about the approvals process in this country. So for those who don't know, McPhillamys, it's one of the world's largest open pittable gold projects. It was fully approved. It's between Bathurst and Orange. This is Regis Resources. Jim Beyer is about to present. 61 million tonne at 1 gram of gold a tonne, 2 million ounces, all in sustaining costs of about $1,600 an ounce, 1,000 jobs. They've already spent about $150 million, and it was fully approved by the New South Wales government. It was fully approved by the federal government. The local Aboriginal Land Council did not oppose the project whatsoever. There were cultural heritage surveys. The EPA ticked off on it. The Department of Environment ticked off on it. The Independent Planning Commission ticked off on it. And what happened at the last minute? Well, Environment Minister Tanya Plibersek declared a Section 10 over the project. Now, I'm not sure about this. I'm only a young fella. I've never heard of anything like this happening. And my role to play, and 2GB's role to play in this, and please, apologies, I know I'm indulging here, is the cause of Minister Plibersek's decision. Her name is Nairi Reynolds. Now, Nairi Reynolds, she's a Wiradjuri elder. Now, she is the lady who lobbied for the Section 10. And when we heard about this, we looked into it. Because Nairi Reynolds only represents an Indigenous group made up of 18 people. She didn't go through the native titles process. Her group doesn't officially represent the Wiradjuri people. Nairi Reynolds said she heard voices of her ancestors calling on her to cancel the mine. And she said once the mine was cancelled, her ancestors were happy. Now, Tanya Plibersek listened to this, and she cancelled the project, but it gets better. I looked into Nairi Reynolds. I've been lucky enough to do a lot of work with Indigenous Indigenous communities. Not enough, but enough. And so I rang up a few mates of mine out that way. So I spoke to Uncle Graham. He's a Wiradjuri elder. Uncle Graham said, never heard of her. Auntie Chris, never heard of Nairi Reynolds, this Wiradjuri elder the Environment Minister listened to cancel $1 billion gold mine. James is a local Indigenous Wiradjuri man, never heard of her. Roy RC, he's the former chairperson of the New South Wales Aboriginal Land Council. Never heard of her. So who is Nairi Reynolds? And when we blew this up, Tanya Plibersek, the Environment Minister, said, well, there's nothing to see here. She said she hasn't cancelled the mine. She said, we've just cancelled the tailing storage facility. Well, I mean, anybody in the mining game understands that cancelling a tailing storage facility is paramount to cancelling a mine. She also said, well, it's not that big of a deal because Regis Resources, well, their share price isn't in free fall. So it's all good. It's all good. Well, she ignored the fact that the gold price is at a record high and Regis Resources has just released record cash flow. And then a few weeks ago, it came out that there was a goat farmer, a local goat farmer, and a beekeeper who didn't want the project. And she said, anybody saying that the mine's cancelled is peddling misinformation. Misinformation. So there you go. That's the story of McPhillamys. We're about to hear from Jim Beyer. We're very privileged to have him here. And just before Jim, I invite you to come up and speak. We've also got the Managing Director of Polar X, Jason Berton. He's got a project in Alaska, copper project, another one in Nevada. And just on Alaska, check this out for a grade, 19 metres at 7% copper. It's remarkable. So with no further ado, I'd like to invite Jim Beyer up to tell us about his wonderful company. Thank you very much.
Geez, there's a bit of a wind-up. All right, I can't do that, I can't do that, I can't do that. All right, thanks everybody. All right, so my name's Jim Beyer. I'm the Managing Director and CEO of Regis Resources. So there's a couple of things I'm going to talk through today. The first piece that really I'm going to talk about is what Regis Resources is and who we are, and the reality is that we are much bigger and much more than just McPhillamys project. That's not to discount the issue that this situation, I think, presents in confidence in the country. And I can speak pretty clearly, having just in the last couple of weeks come back from the Denver Gold Forum, where there was probably one or two questions that I was asked by just about every person that I met. But anyway, I want to talk a bit about I'll talk a bit about McPhillamys, not to the same degree that Will did, but I'll set a little bit more context for it. I'll do that a bit later on. So I am looking, this is cautionary statement, a couple of pages of it, so there's obviously a lot of arm waving that goes on, and this is the bit that promises to give up your firstborn child if you deal with it inappropriately. Let me know, because mine's ready to be handed over any minute now. Okay, so where are we? What do we do? Well, we're a gold mining company listed on the stock exchange, and we're made up of two primary production points. There's the Duketon operation, which both of them sit in Western Australia, and our head office is in Perth. Duketon sits on the Duketon Greenstone Belt. We own that asset 100%. Last year, that produced about 290,000 ounces for an all-in sustaining cost of a bit over $2,300 an ounce. We also own a 30% share in a mine called Tropicana, which is a mine that produces at 100% about 450 to 500,000 ounces per annum. We are in a joint venture relationship there with Anglo Gold Ashanti, and we bought that asset probably 3 years ago, I think, off IGO. Pardon me. The other asset that we've got, you can see our reserves there. We used to have a lot more reserves, but as part of the write-down, we had to write off, I think it was about 1.9 million ounces. And we have McPhillamys sitting over here in New South Wales, which is a great project, and I'll talk some more on that shortly. So that's basically the spread of our business and the scale that we produced last year, both production and cost-wise. Corporate, our board, we've got a great board made up of quite experienced operations, finance and accounting. It's actually a well-structured board, in my opinion. And also there's some names there, our management team, which people might recognise, a couple of people from that. Our capital structure, we have about 45% of our shareholders are based here in Australia. The next big chunk is North America at just on 40%, and then the rest is sort of spread throughout the place. We have 755 million shares on issue, market cap sitting at about 1.4 bill, and we have 300 million in debt, although our net debt position now is, or at the end of the financial year, was about -5, but it's well up on that now, primarily because we are in a very significant cash building phase for a number of reasons I'll go into shortly. Looking at how we go about and how we go about delivering on our business and making money, we do that in what we consider to be a safe and responsible manner. On the safety front, if you measure safety on lost time injury frequency, we were really pleased to have delivered zero lost time injuries last year. Safety, like anything, you can never relax, and in fact we had an incident last month where somebody fell over backwards onto a bar and they've badly bruised their back. So we hit a lost time injury. Why is that important? It's just a reminder that no matter how good you think you are on safety, you can never take your eyes off it. Our female participation is sitting at slightly above average for the state, and our land rehabilitation, which we hadn't been doing much with over the years, we've really picked up. People will realise that it's okay from a cash flow point of view to kick things all the way to the end of the mine life, but sometimes it's a lot cheaper on a unit cost basis to do it as you go, and we've done the numbers and that's what we're doing, and also keep the liability down. We've got renewable energy farms. It's fantastic now. We've got a solar farm that's been running at Duketon, saving us $85,000 a week on diesel fuel savings. All our power, a lot of Australian WA gold mines, they get all their power from diesel or a gas line if they're lucky enough for it to be nearby. So anything you can do there has a great financial kickback. Tropicana is installing a 61 megawatt renewable energy, and we believe that this is probably the largest privately owned renewable energy farm that's going in Australia at the moment for direct private use. And importantly as well, we do take cultural heritage very seriously. We don't actually have a native title declaration or an application over our site at Duketon, but we nonetheless have got a very good relationship that we've been building with the Matchinjarranalia, working on building some sustainable skills there. So we take we think we put a lot of green ticks on our ESG. It's just a sensible way about going about doing our business. Looking forward, what does the business look like, and where are we planning to take it? I mean, Duketon has been through its best years. Probably 3 or 4 years ago, it was producing as a site 350,000 ounces, super cheap, but life was easy. Oxide, low, shallow pits, easy mining, and easy milling and good recoveries. It's a tough game now. We're down deeper. We've also been running out of surface reserves, so we've been starting 2 underground mines. But we see that Duketon has got this capacity to produce between 200 to 250,000 ounces out well beyond the current reserves, and I'll explain why. As an underground miner, if you're looking at it and trying to figure out how to value an underground gold mining company, whatever you do, do not look at the reserves alone, because they do not reflect the true value of the business. At Tropicana, obviously a slightly lower production, but we see that for at least out to 2028, 29, while we're running open pits and undergrounds, that we will produce between 135 and 150,000 ounces. Duketon, a little bit more detail here. As I said, it's made up of a combination of open pits. There's actually 3 mills. We've put one of our mills on care and maintenance at the end of the year because we ran out of dirt. That's up in the north. We're looking at some options for low-grade stockpiles that are pretty good at today's gold price, whatever it is, $38.50 or wherever it's sitting. So we're just evaluating that at the moment. But this year, Duketon will produce somewhere between 220 and 240,000 ounces, sitting in an all-in sustaining cost between 25 and 2,800. Now, there's a bit of that all-in sustaining cost that's non-cash, and I'll talk about that at the end when I talk on overall guidance. But Duketon is really made up of 2 underground mines, a few open pits. We've just recently announced the start of a new underground mine, so we're going to have 3. And what we're really doing is we're driving for 4. We think if we hit 4 underground mines, that these deposits have the capability of going on well out beyond way beyond their current reserves and out through past the end of the decade. And the reason for that is it's this classic story of underground mining where you've got 2 years of reserves, and after 10 years of mining, you've still got 2 years of reserves. And to reflect that confidence, the graph there on the left, you can see the maiden reserve that we had at Duketon at Rosemont Underground when we first kicked it off. It had about 123,000 ounces. And here we are, whatever it is, 4 or 5 years later, our reserves underground at Duketon are now 335, so nearly 3 times as many reserves. But not only that, during that time, we have produced 250,000 ounces from underground. That's the underground story for gold mining. That's what we look at, and we can see that perpetuating. So we've got the producing areas are the ones in the yellow boxes, and on the next slide, the newly announced Garden Well underground that'll be in production probably in about 18 months' time or so. So that's 3. And what we're really trying to do is we think each underground mine can produce somewhere between 40 to 70,000 ounces a year. So to hold that 200 to 250,000 out from underground mining alone, forgetting about open pits, we need another one. So at the moment we're sitting on at least 3. These are the ones that are sort of sitting at the front of the stove that we're trying to see whether we can cook them into a nice souffle or whether they burn in the pot. But Tui is a pit that is very similar geology to Garden Well. That's got some great intercepts in there that you can see. I can't because my glasses can't read that far, but there we are, 7.9 metres at 2.5. That geology is the same as Garden Well, so we see that continuing on, so that's got great potential. Ben Hur on the bottom left, that's a mine that we've been producing from now for probably a year and a half. Some spectacular intercepts sitting underneath that to go underground. 3 metres at 17.8, 1.6 metres at 26.5. We've just got to put enough holes in it to hang it together. And then we've got another one called Merlin, which is a greenfields piece of work, which has got both underground and open pit potential. So do we think that we can get to 4 underground mines to sustain that 200 to 250? We're certainly pretty confident of it. We haven't got it yet, but that's where we're heading, and that's the direction that we're driving Duketon. While at the same time, exploration-wise, we're looking for a new open pit, maybe 500,000 ounces. At Tropicana, it's a very similar story. Trop has one production from one big pit called Havana and 2 underground areas called Boston Shaker and Tropicana. And we've just, about a couple of weeks ago, announced a 3rd new underground area starting production, which is Havana Underground. Now, Tropicana has seen exactly the same story on underground reserves growth as we saw at Duketon. You can see the slide on the left. Back when the maiden reserve was declared at Boston Shaker, it had 320,000 ounces. This is at 100%, not 30%. Now here we are 5 or 6 years later, and our underground reserves are now double to 661, and in that time, we've also produced nearly 500,000 ounces. So the undergrounds just keep on going, and in fact, we've drilled holes way down plunge of the existing resource modelling, like 600 metres. These are the holes sitting down here and over here. They have got the same intersects, same lithology, same geology. This will just keep on going. So we look at Trop and think long extended life and new potential underground. As I said, I won't dwell on this one. This is the Havana underground project, but interestingly enough, for a number of reasons, we couldn't run some of our drills out in the field away from the mine, so we actually brought them in and put some drilling, snuck a few holes in where we weren't supposed to, not culturally but planning-wise, and we found in these areas that had previously been considered to be barren or unclear, but through this offset fault structures, we've been hitting some very significant gold intercepts in areas where there just wasn't considered to be anything before. So we could see another underground area opening up there maybe in, 3 or 4 or 5 years' time. A bit of drilling to do there. So we think Duketon's got good life ahead of it from underground. Tropicana's got the same. Exploration potential is huge. There's a couple of graphs that we do to try and reflect why we think that the Duketon Greenstone Belt, which has been around geologically as long as any of the others in that part of the world, hasn't had much, only 10 million ounces of gold has been identified, where you look at some of the other big greenstone belts and they're massive. And what's the difference? It's basically time and money. The greenstone belts in Western Australia, the more time you spend, the more money you put in, the more you find. We are just starting way behind the times on both the Albany-Fraser belt, which is where Trop is, and Duketon. So we think there's great potential there. So if you sort of look now, we've got our operating business. We can see solid life being generated now as we transition Duketon to an underground. We see Tropicana really growing in life, in value. Really pleased with that investment. So the other piece of investment potential that we had was this thing called McPhillamys. Now, it was 2 million ounces of reserves. It was a billion dollar project, so it wasn't insignificant. In its first life, it was going to have about 10 years of production because the ore body continues on at depth. In fact, the grade improves with depth. Average annual production of 187,000 ounces and an average all-in sustaining cost of $1,600 an ounce. Less than that, actually, but let's round it to 16 to make the maths easy. So what does that mean? What's the scale? How do you figure out what that actually is valued? If that was producing today, and we were producing 187,000 ounces, and the gold price today is $3,800 an ounce, more than that, but do the maths. 3,800 minus 1,600 is $2,200 an ounce. $2,200 an ounce times 187,000 ounces a year is what? 370 plus another 10%. It's $420 million, $400 million cash flow a year that mine would be making if it was operating now, including royalties, taxes, all of those sorts of things. So this was certainly, it wasn't a small project by any stretch, but usually long life ones aren't. Like this, certainly in the open pits. And there's huge potential for this to grow. So what happened? Yeah, well, we'll sort of started to go into some of the details of it and some of the other bits and pieces. I won't be quite so. But on the 16th of August, and one of the important things is about this situation, I mean, nobody likes it, right? But the fortunate part about it is it's actually put the issues that the industry is facing into the spotlight for the general community. If there's one thing that I think the news outlets and the media picked up was this was no longer some issue that the resources industry and what are they, they make so much money, who cares? All of a sudden, people started to sort of lean in on the table and sit up straight and say, what does this mean? This doesn't smell right. So, what happened? And what does it mean? Well, the minister declared that this plan here, on the slide here, you can see the project area. That's the area in purple, which I think coincidentally happened to be the exact application area that the Section 10 was made under. So it didn't go anywhere else. And over the years, it was made back in October 2020. And we went through all of the processes with IPC approvals, state approvals, which actually went up to the EPBC, people that administer the EPBC Act under Minister Plibersek, got all the ticks. But then back in August, there was this decision was made from the Minister to declare the areas in Crosshatch as declared protected under Section 10 of the Aboriginal Torres Strait Islander Heritage Protection Act of 1984. And that, as we had clearly notified, as we had been queried about what would the implication of this be, we made it crystal clear this would make the project unviable. We did say that we spent a number of years, 5 or 6 years, going through looking at four areas, 30 different options, but this was the one that ticked safety, heritage clearance, ironically, environmental, groundwater. This was the one, and it certainly, I think one comment was made, it was just the cheapest and the fastest. This was by no means the cheapest or the fastest. I mean, this is a downstream construction. If you understand, tailings dam construction downstream is the safest, but it's also the most expensive way of building it. So this killed the project for us. What had been approved, we no longer have a tailings dam. Don't have anywhere to put your tailings. Got nowhere to go. Now, as you can see, it's not just the tailings area. It was also around this little creek called the Belubula Creek, which was also an area we can't go into or across, and if there's a question later on, I can actually read out what the restrictions are on it if you're interested. But it's pretty interesting. And keep in mind, this is freehold property. This is not Crown land. This is freehold property. We own this property. This is farming land. So we can't move it. And this little area here that's a yellow dot was an area that was identified as being culturally significant, but it wasn't declared because we weren't it wasn't under threat from our activity. But we were told if we do put it under threat, it will be declared. So it was pretty hard for us to try and find a location for that dam. Our time frame, we think, could be anywhere up to could be 5 to 10 years before we find a good location, buy the land, clear it, drill it, do all of the things that the industry does to make sure that we do things right and safe. You know, it has sort of been a little bit of an interesting conversation with some people because I sit down and they say, oh, surely we can find another tailings dam quickly. This is not anybody from industry, within the next 3 or 4 months and just keep on going. This takes years to do. You have to drill groundwater, do all your surveys. It is not a throwaway piece of ease to find a new location. So, and this is the last slide of this little story. This was the area of trying to find how difficult can it be. The project area is 2,500 hectares, and the area that was being designated as Section 10 was 400 hectares. That leaves 2,100. It's easy. It's just cardboard cut out and you'll find somewhere to put it. Well, can't put it over the ore body, obviously. Can't put it here, because that's the rock waste dump. Can't put it here, that's the process plant. We could remove the process plant, but can't put it there. We can't put it over here, because this is in the way. We can't put it here because the umbilical cord of the river is running right through. In fact, under the declaration, we can't traverse this. So even if we could put it over here, at the moment, we don't think we can even run our pipes over the top to get to wherever the tailings dam is. So we are doing a lot of work at the moment to, number one, understand our legal position on this decision, and number two, hope for the best, try and see if there's a legal way through it, plan for the worst, find a different way, find a new location for the tailings dam and get to work on that. So there are our two streams of work. So wrapping up, this is the company. As I said at the start, we are not a single asset company. We are not going to be defined by the woes of McPhillamys. We are actually an extremely strong cash generating business. We will this year produce between 350 and 380,000 ounces of gold. You can see the all-in sustaining cost range. Keep in mind that the all-in sustaining cost has about $150 worth of non-cash costs. AISC is not an accurate, it has accounting movements in it, so don't think that it's a cheap and easy way to calculate cash flow. You have to make sure you're looking at the right numbers. And we've got the growth capital that we've got sitting in there is for our two new underground mines, and there's about 10 million bucks we put in for the Havana project. And you can see the amount we're spending on exploration. So that's the outlook for the company. That's giving you a picture of where we've, not so much where we've come from, but what our business looks like, where we're based, how much we produce, our cash generating capability. I mean, if you've been following the Regis story, we had a hedge book that was absolutely debilitating for a number of years. We had over 400,000 ounces hedged at $1,571 an ounce, Aussie. It was just killing us. If anybody ever asked why we stopped paying a dividend, it's because we had to start selling into the hedge book. But we broke clear of that, and the reflection of our cash generating capacity was in Q4 last year. We actually added to the cash balance about 110 million bucks over 3 months. 20 of that was a tax refund. The other 90 was from our operations. So we're a strong business. We're not defined by McPhillamys. McPhillamys is an important project, and it's very important that we maintain the rage, for want of a better description. But you know, Regis will work our way through this, try and working it through the appropriate channels, and hopefully we can get a change in the position on it. We'll look for an alternative location for the tailings dam, but in the meantime we'll continue to be and build a very successful gold mining business behind it, so that when the time comes, we'll be in an even stronger position to take on this project when it can happen. It's just a question of when. So I won't go through that. That's all pretty straightforward. That's the pitch. Hopefully you understand a little bit more about Regis as well as McPhillamys, and I think there's a Q&A after this where if anybody's got any questions, I'll think about answering them.
Stay up here, we'll do questions now. I think we'll do some questions straight away, why not? And then we'll go straight into Jason Berton from Polar X. Does anybody have any questions? Yep, just one question though. Can we get the microphone? Thank you.
Okay, so I've just got one question in two parts.
Let me get my pen out.
The first one is, now you're making all this money, when are you going to start paying dividends again? That's a nice and easy one. The second one is on Tropicana. I seem to recall on the original Tropicana there was a concept of having a second mine to the south, as in a couple hundred K away, I think, from memory. And otherwise there are a few satellites that could come into the north.
Yeah, okay, your first question, which is around capital management, and you're right, we certainly go from generating very limited cash to significant. The board's looking at how we deal with that and what our plans are for that. Obviously, one of the priorities up until whatever it was, the 18th of August, was to put ourselves in a position to develop McPhillamys. Our position now, unfortunately, we've got many more options in front of us. Will we return some as a dividend? Will we undertake a share buyback? Will we invest it in other existing operations and undertake M&A? That is all actually part of the equation now that the board, as we look at from a strategic point of view. Obviously, I'm not going to answer that today. That's their decisions for the board to make, but it's certainly back on the equation for consideration. The other question, I think, was about Tropicana and other satellites. Absolutely. We've actually been doing quite a bit of exploration work, probably about 30 or 40 k's to the northeast of the Tropicana immediate complex, and we've redirected back to very near mine, so within a K along strike, both north and south, because over the years the knowledge and understanding of the deposit has grown much more significantly, and areas that had been previously gone, there's nothing there, let's go further away, we're actually coming back and saying, holy cow, we know a lot more about this now, so let's use what we know and what we believe is sitting underneath cover, because there's a fair bit of cover there. I don't know about the other potential deposit further south, but I'll go and have a look at it. But yeah, we're constantly, the similarities of, we see the mill is a 9 million tonne mill. By the time you hit 2029, we won't be able to fill it. You cannot fill that mill from underground alone. So, first prize is to find another open pit. Failing that, we'll just continue to increase the underground capacity. The way the mill's built, it's quite modular in its nature, and we can ramp it down in throughput without compromising anything, so it's easily managed. So there you go.
Anyone else? It's all right.
Thanks. Jim, just wondering if it's personal or a Regis view, holistically, Australia as a destination for mining capital, how would you see it now with reference to what you've experienced in the last few months? How would it stack up relative to North America, South America, Africa, and how would we be seen now on the basis that the semi-autonomous region of Western Australia seems to be fine? How would you stack it up?
Well, first of all, understand that the act that was used in this particular instance got nothing to do with New South Wales. It's a federal act. And for those that aren't aware of it, there's the Hindmarsh Island Bridge affair, as it was called, back in 1986, something like that. It's worth a read. Really worth a read, because I don't know whether there's parallels or not. I guess one of the things is we actually don't know what the reasons are at the moment. The Minister hasn't provided yet her statement of reason. We got some loose things, but you know, the facts, as far as we could tell, were all the same as it had been presented and considered by the IPC, by the state process, and by the EPBC group, department. So we don't actually know, you know, genuinely we're not sure. I mean, you know, the industry does what it needs to do to recognise and respect Aboriginal culture and heritage. So there should be no undermining of that message. What we need is clarity and transparency, right? That's what we need so that we can plan around it. So coming to your question, and I was asked this yesterday by somebody, and I said, look, you know, I had questions. I had people coming in and ask, you know, who manage multi-billion-dollar funds, and they said, why would I invest in Australia? You've got sovereign risk. Isn't that what this is? And you're sort of sitting there with wanting to, one is, yeah, this has had a big impact on us, on Regis, and you want to answer with that hat. The other part is, I'm an Australian and I don't want to undermine our country because, you know, what a great place to live. And without mining, we would not be living the lifestyle that we live. So we need mining, right? Just as a sidebar, and I'll drift off on this, anybody know how much we paid the mining industry last financial year, paid in royalties and corporate tax? And the two students, Lucy, and you're not allowed to answer this because I already asked you that. Does anybody know how much we paid? $74 million, $1 billion, $73 billion in 1 year, 31 billion in royalties and 40 odd billion in taxes. And I was at the mining club function last week, and it's easier over there because we've got a new hospital called the Fiona Stanley, which is, you know, pride of place. It's a crown jewel sort of thing, and Optus Stadium as well, where they play Aussie rules. I'll explain that to you guys if you need some explanation, being a Lions supporter. I had to weave that in there somewhere. I lost my train of thought. So it was very important, though, I can tell you that. No, the cost of the hospital was $2 billion. The cost of Optus Stadium was 1.7. So the mining industry contributed last year the equivalent of 35 major capital city hospitals. And we get no credit for that. None whatsoever, or hardly any. And I think we need to, and it's always this we, which is sort of that, you know, somebody thought that everybody should do it and in the end no one did it, or however that story goes. Individually we have a role to do in that, playing that as well. So, back to your question, right? Yeah, look, I don't think it hasn't helped our position at all. It doesn't make me happy to say that. Other countries, they've got their own risks. I mean, North America is, you know, industrially it's slightly more challenging because of it's a different industrial scene. Permitting, you don't want to be permitting anything anywhere really. It's just getting harder and harder, which is what we need to try and get on top of. But this one in particular is particularly concerning because at this point in time, if I'm asked, I can't say why that area was declared a Section 10. And that makes it very difficult for me to present an argument that sovereign risk hasn't increased.
We have time for one more question. No more?
Cool. All right.
Gerardo.
Just in front of the end of every boom, there seems to be one of the biggest reasons that are unquoted and unmeasured is that we've run out of enough geologists, geophysicists, and mining engineers, etc. How are you finding the resource, the prime resource to actually execute all these projects?
People?
Yes.
It gets harder every year.
And so a bit like Glencore and BHP is finally advertising what the benefits of mining, right? But they should have been doing that 10 years ago, right? And they had plenty of money to do it. Why isn't the education? I know I helped send 10 engineers to South Africa many years ago in the mining club here. Why isn't the business, particularly strong cash flow companies, promoting more people to go, help them get scholarships to do geology or mining engineering, whatever. So sorry about the.
I mean, there's a few things in that to unpack, as they say. But I mean, the industry, every now and again, there's being president of AMEC as well, this whole discussion goes on about what can we be doing to raise the profile, and I think sometimes there's a little bit of stick your head up to tell everybody, and it gets whacked down because there's more negative than positive, right? So I think there's been a little bit of that across our industry. It's great to see the big guys and girls sort of getting out there trying to raise the profile, but I think, I don't know, personally, and every time I sit down and talk with people, the great feel-good stuff on TV looks great, but people, they've got no idea on the quantum, right? How much did this rail tramway system out here, this attempt to copy Melbourne, how much did that cost? How much? 20 billion. Take your phone, yeah. Oh, yeah. Yeah, I mean, I think coming back to your question, we just need to, each company needs to do what it can to scholarships, jobs, vacation work. I mean, one of the initiatives that, when I was a young undergraduate, a while ago, I worked for MIM, which is where this tie comes from, as a VAC student in Mount Isa. And back in those days, Mount Isa employed over 200 students over Christmas. It was absolute bedlam, chaos, and heaps of fun. But what they did was, their policy was, anybody who works within the company who has a kid that's doing tertiary education, regardless of what it was, they gave them a job. They gave them a job over Christmas. And actually, it was, number one, it was a great attraction for the parents who were working there. But number two, what it also did, it exposed a whole bunch of people who would never have been exposed to mining. It gave them a bit of time in a mining town, and it gave them a bit of time in an industrial place. And that was a really important part. And it's actually something we're trying to do at Regis. It's just a little bit to see what we can do, because it's not the, people who are already studying. We need to be working on everybody, and we just saw that as being an opportunity. So, scholarships, support. I mean, jobs. Kids want jobs. Parents want jobs for their kids. That's target the parents. That's an important part as well. Anyway, I'll leave it at that. Thanks.
Appreciate it. Thank you, Jim. Now I've got Jason Berton from Polar X, Copper in Alaska and Nevada. Thank you.
Some interesting thoughts to follow. Finally get to present at the Sydney Mining Club, and there's all that controversy ahead of you. So I'm going to tone it down a little bit, actually. I can see the industry is under attack in parts, but we're really not in Polar X. We're based in both Alaska and Nevada, two Tier 1 mining and exploration jurisdictions. Regarding like native title sort of thing, I think maybe they should take a closer look at the way the Alaskans have the native corporations set up there. It's a very successful model. Most of your mining contractors are actually owned by the native corporations, to be honest, and they're run by native Alaskans that have gone through Harvard and Yale and so forth, and they're incredibly successful. But thinking about today's theme, the industry under attack, well, Polar X is, like many other junior explorers, is kind of under attack on the market pressure side. Why is that? Well, I'm talking to an audience that pretty much knows the answers. Had many interest rate rises, and the impact that has had on disposable incomes. And when you look at the driver of secondary market stock prices and hence your market valuations. The risk appetite is just not there. Too many people don't have the readies to put into the market. They've also got, getting 5.35% returns on term deposits at Macquarie Bank. So why would you put your money into high risk assets at the moment? But government, let's not waste the opportunity to put one boot into the government at least. There's also government overspending, which Tanya Pulbersek's probably part of, that has impeded the RBA from lowering interest rates in comparison to how OECD peers. So we would like to see the interest rates come down like everyone would, because directly we think it's going to affect the sentiment for risk in the junior sector. It's not an entirely government spending issue, however. There's also been a blind eye, as I like to refer it to, from investors towards some commodity price headwinds. So I like to say, remind people, pay attention to the commodity price. It really does tell you something. Last year, lithium prices were crashing. At the same time, investors were clamouring into lithium exploration stocks. And we saw that didn't end very well. Conversely, this year, we've had a turnaround in copper, gold, silver. Prices are all surging, but prices in share prices in juniors aren't reflecting that. Okay, so what do you do as a junior when you've got Tier 1 jurisdiction, you're in the rising commodity prices, everyone would think you're really hitting it at the right time, but you've got subdued retail investment response? Well, if your major shareholder is Australia's largest gold miner, and in many ways Australia's most successful gold miner, Northern Star, just take the opportunity also to look at who else is on our register. As a small cap, we've got Ruffer, US Global and Lundin Mining all on there. It's an impressive registry for such a small company. We've got an outstanding scoping study that we released in January this year, and I'll show you some more detail about that later. But when you've got all this, you don't give up, you press ahead. In March this year, Northern Star fully underwrote a $4.9 million cap raise and didn't charge a fee, anything like that, and that was a very tough market to do anything in. So it's just an indication of the kind of support that they've been giving us. And once again, they were the cornerstone investor of a cap raise that we did end of July, start of August. They're now at 16%, and they're also in Alaska. They are the owners and operators of the Pogo gold mine there, which is a very successful venture for them. So as I said, you press ahead, because we know that the market lacks efficiency, but when you've got good assets and you've got the rising prices in your commodities, you know that eventually the market will reward you. So one day you can advance your assets down the production pipeline. Hopefully you don't get the ministerial or gubernatorial favouritism that Regis has got, and they can actually advance through the permitting pipeline. It's actually one of the strengths that PolarX has with Northern Star on our registry and operating in Alaska. They will be very helpful in us navigating through the approvals process. All right, now just on the commodities that we're involved in too, I think the copper and gold space are probably the two best metals to be involved with right now, particularly when you see the iron ore guys like BHP and Rio Tinto refocusing most of their attention now on the future of copper. We know that it's on critical minerals list in the US. I'll move on to what we're doing in Alaska. Okay, so just get the... That there's Pogo. That's Northern Star underground mine. It was at about 13 million tonnes when they took over this about 4 or 5 years ago. It's now over 20 million tonnes. It's high grade. Their head grade's about 13 grams per tonne. It's got a very small footprint. It's not dissimilar from the footprint that you see at our projects that I'll take you through in a moment, Caribou Dome and Zackley. You've also got some other assets in Alaska, which tells you why we were attracted to Alaska in the first place. You've got the world's highest grade zinc deposit in Red Dog. It's at 17% zinc. You've got Donlin Gold Project owned by Barrick, which is almost 80 million ounce deposit. You've got Pebble, which is a plus 10 billion tonne copper deposit. It did run into some environmental obstacles, and it's actually on ice at the moment, but it's due to the salmon spawning ground issue that they had there. You've got Kennecott, which is a historical mine that was mined about 100 years ago. It was the largest. It was the highest grade highest grade copper deposit on the planet at 13%. We're in the same rock unit that one's on. It's in the Rinjalla terrain. And we're situated on the Denali Highway, which links to two highways going up the centre of the country. And the key about being on the Denali Highway in Alaska, you want to be close to infrastructure, particularly road access. You do get brutal winters up there, and you don't want to be too remote. So we're fortunate in that regard. We're also, regarding tenure, we're on state-held ground. In case anyone's wondering, people know the history of Pebble. We're not on federal ground, and we don't have any native title claims near us. Not that that would be a particularly problematic scenario in Alaska. As I mentioned before, the native corporations are very pro-development, and I mean, we hire a lot of the local native workers anyway, like they're mining contractors, as I said previously. The other issue is we're on, yes, I said state ground. We only require state approvals except for the water approval, which is Army Corps of Engineers, which is a much better department to go through than NEPA in the US. So as far as we're positioned, it's about as good as it gets in Alaska. There's also, I mentioned, there's no salmon. There's natural culvert downstream. We get grayling, but for some reason people don't care so much about grayling. Okay, so when you look at Caribou Dome, we've been drilling there this season. Caribou Dome is about 7 million tonnes at 3.1% copper. It's high grade, but we're drilling higher grades than that consistently now. So I wouldn't be surprised if we can make significant improvements on that in the future as well. Zackley, it's at 4 million tonnes, but it's an open system. It's copper and gold, and there's a lot more to do at Zackley. Combined, just over 11 million tonnes. We've done a scoping study on this. We've done 3 scoping studies. You can see that this is already at a viable, mineable scale. However, our major partner, Northern Star, is very keen for us to explore more, find more resources before we head further down a feasibility scale, feasibility pathway, which we'll eventually do. Okay, so just focusing on recent drilling at Caribou Dome. In 2021, we released drill results included 19.1 metres at 7% copper. Included in that, there was almost 9 metres at 19% copper. These are astoundingly high grades. If anyone remembers Sandfire and DeGrussa, you're probably hearing grades like that from that project. And this year we went in underneath those intercepts. Now the key here is, because it is a structurally complicated area, there's a fault thrust belt. For those people who don't know, I'm a PhD in structural geology, so this is actually perfect ground for me to apply my skills. Our core that we drill is oriented. It means that we can get quantitative measurements on the structures and we can piece this together. As we're drilling, focusing on this high grade zone, and it seems a bit nitpickety to some people, but if I can tie down the high grade part of the ore body and get probably double the size in tonnes and also increase the grade there, we'll be probably over 5% in that zone as a resource, potentially. Now that starts from surface. That kind of thing would pay itself back in months. That's the potential upside for Caribou Dome on its own there. We're open at depth. We've got 2 more holes where assays are pending, so that should be released to the market in the coming weeks, probably about 3 weeks' time from now. Okay, for people that are curious, that's what high-grade copper core looks like at Caribou Dome. When you lift that stuff up, it's heavy. It's assayed at 13%. You've got 21 grams of silver in there too. Silver is a nice little credit to have. Those core trays, when you look through that, you can see quite a bit of that yellowy green tinge. That's all like 13, 15% copper sort of intervals that we're hitting there. Now the specific gravity for that is significantly higher than what's in the resource. So the greater your density, the greater your mass, the better it is for you when you're mining, that's for sure. Okay, so when we look at our scoping study that we released in January, look, the market's moved on prices, but we used what we think were quite credible prices and realistic prices at the time. I won't comment about how our peers take that, but at $8,500 copper, $1,900 an ounce for gold and $25 for silver, you're looking at a fairly low initial capex when you compare to potential copper mine peers. We're at $226 million capex. It's only a small plant that you'd be doing. You're doing about 750,000 tonnes per annum. So that's why the capex isn't so high, and it's also a function of what the benefit of having high grade. The payback on this model here is about 1.6 years, and you're looking at a 9.5-year mine life. You'd start at Caribou Dome, and then you move over to Zackley after about 6 years. Just an illustration of what's gone on in the prices since we did that scoping study. So copper's up 17%, gold's up 40%, silver's up 24%. So if you do the numbers in your head right now, we know that we're looking at plus $1 billion NPV. We're looking at around 6-month payback period, and that's before we even expand the resource. So what we're focusing on now is improving the resource, but also the metallurgy. So from our second scoping study to our third scoping study, the metallurgical recovery was a big uplift for us. Traditionally, or historically, Caribou Dome has had a bit of an issue with separating the copper with conventional flotation, but we have actually improved that to about 88%. There's also another process that we're looking at. It's an acid leach process. Preliminary results are very good. We're looking at returns well into the 90s. What we are doing with that work at the moment is actually costing it first. We want to know how much, what the difference that's going to be on a capex, and we'll release that as sort of like an alternative scoping study. The appeal to that process is that it will eliminate your freight costs, because at the end product will be a copper cathode. So at the moment our freight costs are about 150 million. The more of that we can win back for ourselves, the better our bottom line's going to be. The test work that we're doing is slightly above atmospheric temperatures. You're looking at about 75, 80 degrees Celsius, so we're not talking about a large energy input. Okay, now Zackley. We haven't been back at Zackley for a little while, but we drilled there for a few seasons from 2017 to end of 2019. Zackley's got a lot of upside. We've got open along strike, we've got it open at depth. I've got in here a couple of things like just the kind of grades that you find at Zackley. So they're outside, sitting outside the resource, 9.3 metres at 2.3 grams gold, 3.3% copper. It won't take much drilling to bring that sort of stuff back into the resource, but that's about 400 or 500 metres sitting outside the resource. And continuing along strike for a couple of kilometres, we do get high-grade hits like this. There is some structure involved, which is why we need to drill this with oriented core. It's also open at depth, so currently the vertical limit is about 200 metres of what we know, and it's open beyond that. Zackley began life in a similar fashion as Caribou Dome. They were both started out as VMS deposits, but Zackley's also had a porphyry overprint. So you've got this remobilisation of the copper, but you've also got some, it looks like there's bimodal gold. So another gold event has come in. And when you get away from the main skarn zone, you get some interesting intercepts. We've had like 50 metres at 3 grams gold, 0.6 copper and so forth. So it's a big system, and it's neighbouring some pretty interesting projects like Mars, which is a porphyry that we discovered recently. So the Mars porphyry, a lot of people have said to us, would Northern Star be interested in copper? They're just a gold producer. And it's like, well, they're not against copper. They're not solely focused on the idea that this has to be discrete underground mines, although they will do those. But they have said to us, Mars needs to be investigated further. So when we drilled a hole into Mars in 2019, we ended it in mineralisation. So we had porphyry textures the whole way through, porphyry veins. And for those people that understand porphyries, when you hit the gypsum, you've changed from a calcic to a sodic system. It's where the copper drops in. The problem was we had a blizzard end our season early, one of the perils of actually doing your work in helicopter work in particular in Alaska, and that ended that program. So we're just entering the top of a porphyry system. We need about 10 to 12 holes to go into that. And so we're also talking about how can we build that into some sort of program with the assistance of Northern Star. Now, taking away from Alaska into Nevada. Nevada is a very exciting place for us to be too. So we're nestled just 2.5 hours east of Reno, and for those that don't know Nevada, there's over 3 million ounces a year produced from Nevada. It's mostly bulk tonnage mining, very big scale, like Gold Strike, which is near Elko. Oops, sorry, how do I go back? Here we go. So that there is the Carlin Trend. People may have heard of the Carlin Trend before. There's repetitions of it. So you've got the Cortez, which goes into Battle Mountain, and then you've got the Humboldt. The Humboldt is where we're situated, and it's the next Carlin Trend. It's developing. So where we're situated, we've got the Rochester Silver and Gold Mine to the south. It's a large open pit heap leach deposit. Our Black Canyon claims are right next door to the Florida Canyon mine, which has recently changed hands from Argonaut, and now it's with Integra Resources. And the one that I want to draw your attention to is Spring Valley, which is on a company called Solitis Resources, which is actually currently going into an IPO. So Solitis was owned by Barrick. Spring Valley was owned by Barrick. It got bought out by Waterton, which is a private equity group out of Toronto. They drilled it out for about 7 or 8 years. They're still a major shareholder, and they're listing it with the purpose of commencing their mining pre-strip next year. So 2 years of pre-strip. They're looking at doing 38 million tonnes moving of dirt per annum. And excitingly for us, it's going to be heap leach. Now, the reason why that's exciting is that we are in the same rock unit, the Rochester Rhyolite, as the Rochester mine, and one of the our ore will go into sulfides. Theirs starts in sulfides, so they're heap leaching sulfides, not oxides. That means you don't need to permit a roaster. Now that's a big deal in Nevada. There are 3, maybe 4 roasters in Nevada, and it doesn't look like you're going to get another one permitted. But doing heap leach on the Rochester Rhyolite unit is music to our ears, because we're not going to get stopped at the gate if we find something and someone wants to play hardball with us. we have the option of heap leaching ourselves, or we also have the option of doing transactions, if we find something, with our neighbours. Okay, so if you look at the Black Canyon claims, sitting next door to Florida Canyon Mine, this area has been toiled over historically by some artisanal miners. They were picking the eyes out of some juicy veins there. Those grades are real. The Indian Ike mine, that grab sample graded at 3,384 grams a tonne. Now, the lowest vein, it's also repeated those sort of grades there, 500s, 300s, 200s. You guys can see those grades. I'll just show you this project, the Golden Staircase. It's a little bit hilly in parts of our project. I'm not going to deny that, okay? So that's our former exploration manager. That wasn't his last day on Earth, but he was a mountaineer, actually, surprisingly. He just got a saw and he cut a channel line through that Rochester rhyolite, and not caring where any of the bonanza veins were and so forth. He actually tried to miss most of those. And it assayed 69 metres at 1.1. Now, if you have a look at Integra Resources, they're heap leaching a resource at average grade of 0.42 grams per tonne. Their cut-off grade is 0.1. It's a different mindset to what we're used to here when we look at what the guys like Regis and Mining and Northern Star and what we're seeing with Spartan and so forth. Over there, they've got very fine grain, they've got very low grade, but they make it work because they're mining at such big quantities. Okay, so what we've done since we've acquired the project, it hadn't had any systematic exploration work on it. We've done a comprehensive soil program over the lot of it, and we've identified several compelling anomalies. There's one of them that's the ridgeline target gold anomaly, which is an enormous anomaly. It's over 3.2 kilometres long. We haven't actually found the limits to either end of it because it just goes under a bit of cover rock. But the units continue under those. There's very large fault systems running through there. Now, we drilled in Star Canyon because we had access to Star Canyon, and that's really on the edge of the anomaly. Even drilling there, we hit like bonanza grades in one of our holes, 9.1 metres, 124 grams. The interesting thing is, when you're not in the bonanza veins, you're still in ore. So you're not going to be trucking waste out of these operations. Everything you truck will go on those leach pads. Now, with the usually coming from geologists, it's exploration geologists for many years. Usually, when you use IP, it's useless. However, there's one setting that I've come across where it actually looks like it works, and that's in Carlin-type deposits, where it's very, very fine grain arsenopyrites. It's the ideal setting for IP. So we've got highly silicious altered rocks. We've got very fine grain sulfides running through it. So you get the coincidence of both a highly resistive anomaly and a highly chargeable anomaly. I've just shown you the chargeable one there because it's easier for people to get their heads around. And I did admit before that it is a bit rugged. So that area to the north, we couldn't really get the guys to do their IP survey over that. It was a little bit steep. But nonetheless, to the south, that's well over a kilometre long anomaly. And fortunately for us, the access road up to that Star Peak runs along that anomaly. So we know we can get the road access up into there. We're just in the process now of getting the permitting for that, the lowest vein and Indian Ike veins, so that we can do a very large program, give this thing the best crack at being successful as possible. When you look at the IP results in profile, fits perfectly with the mapped regional geology. So the mapped regional geology is this section here. And that pink unit is the Rochester rhyolite. Now, that profile's further south than our survey, but when you project that north to where our survey line profile is, they're coincident. You've got the Rochester rhyolite and you've got these two major regional faults running through on either side. So that's your conduit for the epithermal replacement of the rhyolite that's brought in all this mineralisation. And that's why all these epithermal gold veins are there as well. Okay, so the way forward, we're doing the drill permitting and site prep. As far as exactly when, I can't tell you. It's all in train. But we're working closely with the local BLM office to get that ready to go ahead. We're also doing additional metallurgical test work at Caribou Dome and Zackley. So we've retrieved old core from Zackley to improve the gold recoveries. They're down at 70%, so there's a lot of room for improvement there. We'll be working on the resource. We're doing a whole new structural model for that, but also most importantly, focusing on that high grade part of the resource. So you might not see a bigger jump that we had 18 months ago in the resource, where I increased it by 2.6 times, but you'll see improvement in classification and hopefully more tonnes of the high grade there, which is really what's going to pay for this thing to get off the ground. Keep your eye out for any progress with Northern Star as well. We're in close contact with them about how we go about our further exploration up on the Alaskan Range. Be careful. Thank you.
I think we've got time for 2 questions. No takers? Oh, no, you don't get off that lightly, Jason. Tell us about Alaska. I mean, bears, the permafrost, the rugged country. Paint us a picture.
There's bears, yeah. There's wolves. I stress there's no salmon on our ground. Look, it's the most beautiful part of the world I've ever worked in. I've worked in some terrible parts of the world. I've had dysentery in many parts of the world. I've had malaria in some parts of the world, but no, Alaska's amazing. Yeah, it's also, it's not just the geology there. The people there are very much mining focused, so and very committed, and they're also hardy people, right? They endure pretty difficult conditions all the time. So yeah, it's a great place to work. But you do have to arm yourself when you're out in the field.
I understand.
Is Northern Star as interested in Nevada as it is in Alaska? Because it strikes me that Nevada looks a bit more interesting for them.
Yeah, it's a good question. The short answer is they're interested in everything. So it was 2 years ago now that Stuart Tonkin came up to me at Mines and Money in London when we were doing a rights issue and just straight up said, look, you know I'm a shareholder. We want to come in. We want to take the shortfall. And I said, okay. He said there's a couple of conditions. One, if we find something, we want it entirely. And if that's a problem for your shareholders, you let us know now. And I said, I don't think that'll be a problem. So they came in at 10% holding. He said, look, we like what you're doing in Alaska, but we're also looking from a strategic point for ourselves at Nevada. And he said, we've turned Pogo around, so we're committed to Alaska long term. What you've got there is ideal for us because they're underground, like Caribou Dome and Zackley underground. And to be honest, you want to start there with underground permitting. If you find a porphyry at Mars, well, look, you've already got a couple of mines in there, and see how you go there. Although the amount, how deep Mars is, it'd probably be underground anyway. But yeah, they do like Nevada. The only issue is that it's a tough neighbourhood to break into. Now, you can't really walk into Elko and just grab the best project off the shelf. There's a lot of competition there. So they did their homework and said, look, we think the Humboldt is the next Carlin trend. They knew that we had the same rock type as what Spring Valley had. They knew all those parameters, and they were like, we want to get our toehold on you. And so, yeah, they've done both. It's not just Alaska, it's both what we've got.
All right, well, thank you very much for coming today. It's been a great event and fully packed out. Next month, we have another lunch. It's not going to be a leading edge. It'll be another lunch right here. We've got Nickel Industries. And then in December, we've got Linus. So a pretty good lineup the last few months, and we're proud of that. And please make sure on our website you sign up and put your email in, sydneyminingclub.com.au. We're a not-for-profit. We don't get paid for this. Julian sends his apologies. He's in India on a meditation retreat. I think I might have to go on one soon too. But yeah, really appreciate your time today. We've got another half an hour here, so have another drink and enjoy yourself. Thank you very much.